Good morning and welcome, Patriot Radio News Hour. Joe and Jason on this Tuesday. I hope it finds you really well out there today. Got so much. It never ends, right? We got so many things to talk about. We've got the Iranian thing, the new economic sanctions that the United States has rolled out once again. Right, wrong, or indifferent, right? Because you know what? It's not my decision to make whether or not this is a good idea, a bad idea. I think over time, what we're finding out is the rest of the world doesn't like it when we use the dollar as a weapon, and short of going into Iran, which we obviously did not want to do, this was, I guess, the next best option. So we'll talk about what that looks like today. We have, I don't know, apparently Canada is evil again. The president unleashing a wave of tariffs on Canada. Canada has responded this morning with tariffs, what they're saying, dollar for dollar, $20 billion worth of U.S. goods. Canada is also threatening, apparently, up near the border, a lot, I don't know about a lot, but there's plenty of U.S. residents that actually get power from Canada. Now, Canada is threatening to cut that off. That has, at least, I haven't seen that yet, so it's just talk. So we'll have to talk about that. We've got some economic data that came out that was, I don't know, housing data that says housing prices keep rising, yet nobody's buying anything. We had another disastrous sales report. So we got a lot to talk about, and we're going to get to all of that. But before we do, I just want to say that when it comes to Texas and Iskander and all that, zero chill, we will update. We'll have our big Wednesday update. Guys, it's a big one. Big one. So pay attention. We ended our buy one, get one promotion. That is over. I get it. A lot of you are a little gun shy. I did my best to tell you to take a shot at it. I will say this. Starting tomorrow, and I don't know how exactly it all will work, but you will start seeing, how about this? This week, by this weekend, utility buys kicking in. What are utility buys? That's just any of our utilities, like Nectar Pay utilities, those will be being bought on the open market. I think you're going to see a lot of price moving, so everybody better buckle up. I just received all of my terminals. Well, I shouldn't say all of them, just the first round. A couple hundred terminals are now in Phoenix. For all of you Arizona folks, get ready. I'll be telling you where these places are so you can go and spend your crypto and help the merchants out. Something really cool I want people to understand. It doesn't matter. Some of you out there, a lot of you, don't even know how to use your wallets yet. We keep asking and asking. I get it. You're like, I'm just going to wait. I'll get to it eventually at some point. We've created an easy button. Yeah, that Crypto Pop is the arm, I guess, the the fun side of Nectar Pay, where we give all kinds of deals. It's where you can go and look and see where all the places you can go, all the deals they're having, this and that. But anybody, doesn't even matter if you got a crypto wallet. We've got an easy button. Just scan a QR code. Hook up, your bank account, kind of, your debit card. Hit the send button. Voila. However much money you just, $50, $100, whatever it may be, is now sitting there at your disposal to use at these merchants so they don't have to get hit with fees. Yep. Essentially creates your own wallet. Put stablecoin right in there. It's that easy. This thing is going to be massive. We'll talk more about it tomorrow. So I don't want to get too. I get excited. I'm excited. I'm really excited about what's coming. But when we get back, we got to focus in on what is happening. Not only with the Iranian situation, obviously the economic data. We got the tariffs. But really, it's all about the debt. And some of my favorite people have chimed in today. We're going to talk about it. Unfortunately, I'll just say this. We don't have good choices. But a lot of people think this was of all the bad choices, this was one of the worst ones by Scott Bassett. We'll talk about all of it when we return. 800-951-0592, Patriot Radio News Hour on this Tuesday. So let's take a quick look at the market. So today a little better on Wall Street, but not a lot. We'll see how it finishes. The Dow's up 50. S&P's up 10, NASDAQ's up 100. The Treasury yield is down today. Probably more to do with the bad data. And it's still really not down a lot. I mean, we're at 4.65. Again, like I said, no really good choices. The questions are, where was there other choices that maybe would have been a little better? Don't know that. But anyway, that was the choice we made. Crude oil. Now listen, crude. Now this is, again, helping the bond market a little bit. So crude's down again today. So down to about just below $83 on NYMEX, $89 on Brent over this. Hey, did we really get a lot of ships out of the Strait of Hormuz? I know some went out. They were claiming 40, and then people kind of doubted. I don't know. But there's some ships going through. It looks like a little more than what was going through before. But then I saw a report today that the Houthis hit a Saudi vessel and all, I don't know. We'll get to it. Let's look at gold. Down $10. 46.40. Just hang on. Gold. We need a few pullbacks. It got down to 4,600 and then said, we're going back above. Silver broke through last night. Matter of fact, gold was almost, almost 4,800. Silver broke through 69. They tried to whack it. And silver now is saying, don't think so. But it is down 50 cents, 68.35. I still have about 25 rolls of those VT plus peace dollars. Guys, they're only $1,200. $1,200. You're paying $60 a coin. And, we got, $68, $69 silver. And listen, I think this is, nobody's called to tell me. I think we're going to see $90 silver before the end of the year. So buy it, don't buy it. If you hate money and hate silver, don't buy it. If you like money and you like silver, jump all over it. Let's get to the only real big data today, new home sales. I don't know what what to say about it other than it was a horrible number, and then consumer confidence. So these were the two numbers that we got. Consumer confidence fell to 89.4. That is well below expectations. And the expectations back to the January lows. So it is not great. The consumer feeling like, hey, things are going to be getting worse in the next 6 months versus getting better in the next 6 months. And then new home sales, I don't know what to call it other than a disaster, down almost 11% month over month. New home sales are now down 6.3% year over year, right near 600,000 homes on an annualized rate. That is near the bottoms going back, the last 15 plus years. Sales are now down 3 out of the last 4 months. The median home price, at least for a new home, fell, so that's good news. Unfortunately, as we know, still way too expensive, and more importantly, it didn't seem to help as far as new home sales go. But in any event, that was the data today. And again, that did help the markets. But home prices, like I said, up 2.1% year over year still. Almost a re-acceleration. I don't know where they get this data, but sure, okay, if that's what you say. So what happened with the Iranian situation? Well, pretty simple. Scott Bessent yesterday calls it Operation Economic Outcast. Operation Economic Outcast, where the United States is demanding that the rest of the world no longer do business with Iran. And if they do, they will be banned from using the United States dollar or the U.S. dollar system. It probably means they'll ban them from SWIFT. But it was something where everybody's talking about the Chinese. What is China going to do? There was, statements that are not a lot of detail, but the Chinese continue to say this is not the way. This does not work. But when asked about China specifically, obviously China, the number one buyer of Iranian oil, by far Iran's largest trading partner, the answer was no one is above the reach of U.S. sanctions. So that was the Treasury Secretary's answer when they asked about the Chinese. China's cooperation with Iran has always been conducted with, now this was the Chinese statement, always been conducted within the international framework and should not be interfered with or undermined. China is monitoring closely relevant developments and will take all necessary steps to safeguard their own interest. And again, kind of a blanket statement, right? Not really saying what they would or wouldn't. Nobody said we're actually going to sanction anything or do anything. We don't know. They don't know. They haven't decided. We'll see what happens. And of course, listen, the Chinese have been taking a lot of steps to lessen the amount of dollars needed. Unfortunately, everyone needs some, right? So that's going to be an interesting development. We don't have the answer yet, so we haven't seen it. We have the threat. We have the, hey, we've been trading according to international law. The Chinese's answer. There's no reason for that not to continue. And obviously we're saying, well, yeah, there is because we said so. Interesting times, right? We have a huge problem with long-term debt. Now, China no longer likes to participate in that long-term debt market. They've been dumping long-term U.S. debt for a very long time. They still buy a lot of short-term debt because they need dollars. I think we're going to find out how this plays out over the next week or so. This is going to get very, very interesting. And then lastly, we have the tariffs with Canada. Timing probably not good, but nonetheless, the Trump administration, again, hey, you're taking advantage of us line. Guys, he's not wrong. But I don't think people understand this part, Jason. This is how they designed the system. This was when we go back and we look at NAFTA and GATT and really what that was. It allowed the United States to be more reckless with money. Period. Is it any shock that within 5 years of NAFTA and GATT getting ratified, that all of a sudden U.S. debt started exploding? And the deal was simple. Hey, give our big banks access, right? Well, then, of course, you got to remember what came out of NAFTA and GATT. The mega banks came out of that. There was no such thing as a mega bank before that. It didn't exist. So that was part one. The bankers take care of themselves. And then part two was let's have the rest of the world build as much stuff as possible. Okay? We hadn't run a trade surplus since 1971. I think it was 1972. Right after Nixon closed the gold window. We hadn't run a trade surplus since. Why? Well, they wanted to do two things. They wanted to spend more money. They wanted to print more money. They needed to pretend like it wouldn't cause inflation. How do you do that? Well, fire the U.S. worker. Hire the Chinese worker. How great is that? Matter of fact, heck, we can get inflation to go down for a while. Right? And all of that happened, didn't it? All of it happened. Now, part three was, we're going to give you great deals. Why? Because we want as many jobs to leave here as possible. Why? Well, because we want to be able to print. And at the time, think about this. They were able to print about $30 trillion before it really became a problem. Right? I mean, it worked real well. It's over now. But the trade-off was simple. You got great deals. You bought all the debt. Because we're going to be issuing massive amounts of debt, way more than the world has ever seen. But it's going to be great. Look, it didn't cause inflation. Right? What a great thing. We had plenty of buyers. And now we're saying, oh, wait, these great deals. No. No more great deals for you. Now all of a sudden we want the job to come back. Well, we say we do. It won't. It may leave Canada. Right? It may leave Canada, but it's not coming back here. And all as it does is, Jason, it makes the problem the United States is currently in even worse. The more we try to strengthen our grip on things, the more the stuff kind of oozes out the side, right? We got all this stuff oozing out. We'll be back. 800-951-0592. Run to the phone before I have to raise prices. Right now I've got rolls at 20, VG plus peace dollars at $1,200. That deal continues to get better. It looks like silver's going to just keep roaring right past here, 68.50 and rising. $20 gold pieces, 47 and a quarter. Gold looks like, gold just went positive. Look out here, 46.55, 46.55. So what are we talking about? Not even $70. Probably going to be less than that here in a minute. Pretty much buying them near spot, right? It's probably going to be at spot. Don't be surprised if gold closes above $4,700 and threatens $4,900 this week. Be ready for that. Be ready for silver in the low to mid 70s this week. 800-951-0592. Stan Druckenmiller is another guy I tell you to pay attention to. Why is he important? Why was Stan Druckenmiller, Jeff Gundlach, why are these guys important? They both grew up in the era of Soros. So when you think about where did these guys come from in the 80s and the 90s, they came from Soros. Scott Bessent, Soros. Well, it's kind of creepy. You know, when you think about how many Treasury secretaries, central bankers, all come from that same tree. But Stan Druckenmiller did not pull any punches in a Wall Street Journal op-ed calling the Treasury's move to expand bonds purchases and trying to defend prices against fundamentals as a mistake and that they are going to lose. In other words, Stan Druckenmiller says, I don't care what Scott Bessent wants to do. And it's obvious. What does he want? He doesn't want price discovery, right? He wants to say, no, I want bond yields to be less, not more. And Druckenmiller said, listen, if you really think about it, let's take a real look at things. Take away the last 20 years or so. The 10-year note at 4.7, it's not even high. It's kind of, outside of the last 20 years, that's kind of normal. The bond market's not acting crazy. If anything, the bond market's just come back to its senses after the nonsense that the Federal Reserve and the Treasury pulled after the financial crisis. And saying that the bond markets have not been vigilant, that it was a pushover, and it's finally starting to figure it out, and feels that any effort made, whether it's by the Federal Reserve or the Treasury Secretary, Jason, is doomed to fail because, listen, The market after the financial crisis, 10-year note at zero. That was the stupid part. This is just the bond market. The bond market's not even, according to Druckenmiller, they're like, it's not even being mean, right? It's just kind of saying, hey, listen, guys, you had your fun. The party's over. And you got $40 trillion worth of debt you need to pay. And we're sitting there wondering why it is that they're acting like the bond market's being so irrational. And when you think about it, China's not buying. Japan's not buying. The UK's not buying, right? I mean, the rest of the world has stopped buying U.S. debt. I guess when we look at it rationally, it sure looks like Druckenmiller's making a lot of sense compared to what it is that the Treasury's trying to do right now. But guys, this is, I don't know how to be any clearer on this. The only reason that all of this had to take place, why we had to try to help Japan, which hasn't worked. We announced the doubling of the stock buyback program or a bond buyback program, which didn't work. Then they came out and said, well, you know what, we'll go even bigger, but didn't give any details. That didn't work. Then yesterday, they come back and say, well, you know what? We've got the general fund. Yeah. We're almost $1 trillion in there. We'll use that. Wow. And here's the thing. Guess what? That's not enough. I wish it was. I want it to be. How do I know? How am I so certain? Look at what the Fed had to do to their balance sheet. The first time before the financial crisis, the Fed's balance sheet had $700 billion of U.S. bonds in it. That's it, $700 billion. It went to $4.5 trillion. Then they pretended, we can sell some off. And it got right below $3 trillion before there was another panic and shot it up to almost $9 trillion. Of course, they sold it off. They got it to about $7 trillion. And they didn't want to announce again, guys, that quantitative easing was back. And so they've been letting the Treasury do it. I'm going to tell you this. Not only do I think it won't work, the Treasury and the central bank, whether they like it or not, is going to have to reinstitute quantitative easing. How's that for a call? Yeah, I hope you're all prepared. We'll be back after the break. Wow. Gold's up almost $10 now, 46.65 again. $20 gold pieces, hurry, 47 and a quarter. Right now, if I'm guessing, 4,800. And I think gold, don't be shocked if we had 4,700 today. Just saying. And then, okay, so then what? 49? Get them here. Silver. Well, silver's now positive. 68.88. 68.88. Again, I mean, you're going to see silver close above 69, and when it does, it's going to be 75. Think about this. BG plus peace dollars, a roll of 20, $1,200. That's $60. Crazy. 800-951-0592. Charlie Gasparino, for those of you who don't know, he's actually a reporter. Unlike the guys on TV, most of them, they're not reporters, they're commentators. They're just commentators, right? He's an actual reporter. He wrote today that Scott Bessent will do whatever it takes to put the fear of God into what they're calling the bond vigilantes. Now, what's a bond vigilante? It is, in this case, people that believe that bond yields are going higher. That's a bond vigilante. You're a vigilante now. How dare you? I mean, let's not kid ourselves. Based on the fundamentals, that's exactly what's going to happen, right? But he says he's, trying to put the fear of God that shorting the yield curve is going to be bad, and we're not going to allow the 10-year note to get to 5%. I mean, come on. We were at 4.73 the other day. What, 5% is going to, that's it, right? The whole world's going to, everything's going to die if we let it be 5%, which historically isn't that high. But according to Gasparino, that is exactly what is happening. And here's the other problem. Guess what he's doing? Calling the banks, calling people, trying to convince them, and in saying that Wall Street executives with direct knowledge of this told Gasparino the following, and this is where I want you to pay attention. That would include buybacks. Duh. Okay, we got that. Selling short-term debt. Okay, now why would they do that? Raise money. To do what? Buy the longer-term debt. Right? Okay. Those two things were known. Right? I told you them yesterday. Now, according to Gasparino, Wall Street executives have been telling them that the Treasury Secretary is thinking about the elimination of long-dated bonds like the 20-year, etc. Well, there's only 3 long-dated bonds, really. There's the 10-year, there's the 20-year, there's the 30-year. Now, the 20-year is the newest one of them. Why did they create the 20-year? Well, they're loaded up on debt in the early 2000s and said, hey, let's spread it out. Let's create this 20-year thing. Of course, nobody wants it. What does that mean? That means the United States, and again, I don't know that there's a good answer. Okay, I'm saying this to you honestly. There really isn't. The amount of short-term debt the United States is going to have to sell is going to be unprecedented. It is going to be, I think it's going to be a disaster. It's one thing when you have $40 trillion in debt and you've got to roll over 10. Plus we're going to add 2 or 3 trillion more, right? It's another thing. Hey, we've got to roll over 15 trillion. Whoa. Wait, that's an extra 5. Yeah, I know, but wait till next year. Why? What happens next year? Well, we got to roll over 20. What? Yeah, and when the debt hits 50 trillion, we're going to have to roll over more than half of it. It's insanity. And I get where Stan Druckenmiller's coming from. He's like, come on. 5%. Yeah, okay. It's going to end the stock market rally, they say anyway. We don't know. I don't know. They say it will. But historically speaking, that's not that bad. What are you guys doing? That you're going to decide to blow the whole thing up and force the United States into a position where they're unable to continue to fund themselves. I mean, it's suicide. Well, hey, as long as they can get to 2028, what do they care, right? Hey, we just care about the Donald Trump administration. After that, you're on your own. Yeah. $20 gold pieces start to look really good right now. We'll be back after the break. 800-951-0592. Final segment on this Tuesday. Again, $20 gold pieces, 47 and a quarter. Silver's right now 46.65, 55. Silver just below 69. VG plus peace dollars, $1,200 a roll at 20. So that's $60. Don't be surprised to see gold near 4,900 this week and to see silver near 75. Don't be. Now, we don't know. Obviously, we don't know what the data is going to be tomorrow and the next day, and I think some of it will depend on Iran. Some of it will depend on China, right? We'll see how those situations work out. Canada doesn't look like Canada and the U.S. look like they've dug in their heels here. But the thing that I want you to understand is this is their plan. The plan is, how do we prevent price discovery in the bond market? That's the plan. Why? Stan Druckenmiller had a great question, right? Why? Bond market's not being crazy right now, right? If anything, it's probably not crazy enough. And the only thing I can think of, Jason, is people don't know how perilous the situation truly is.
It's bad.
Right?
Yeah,
that's the thing. There's something that they know, gosh, this is going to break, and if this breaks, it's going to take everything else with it. That it has to be that.
I talked about one hedge fund yesterday, situational awareness, and they couldn't sell $35 billion in stocks for their margin call. They had to step up to Citadel, another hedge fund, and try to get them to float them, basically.
Yeah.
So that 5% on the 10-year, Joe, the reason that they're all panicking about the market falling apart is I think the market's already fallen apart, but it's so controlled, it's so fraudulent. There will be a time that they will choose for this to happen, and I'm wondering if those rates going up too fast is going to trigger it before those that want the timing to be at a certain point. Hey, if you know it's going to happen, but you can choose when it's going to happen, right, Joe? And people don't think, well, there's no way anybody has that much control. Well, then, when this one hedge fund was selling $35 billion in stocks, it should have brought a lot of AI tech stocks and others down. If you can't sell it and there's not enough buyers for it, the price should go down. So it's here. If one hedge fund, if it has to be swallowed up because it's one holdings is troublesome to everyone around them, then yeah, that 10-year note matters a whole lot, Joe, because they know, well, we have this under control to drop this when we want to. Don't put these rates higher. Don't do this. You monkey with the timing, Joe. I think that might be the only thing we're looking at.
It could very well be, and obviously another big problem. A lot of the, I guess, let's call it the good news for stocks is so concentrated into that AI data warehousing bubble. Any sudden reaction in the bond markets would cause a major problem there as well. So we've got several things that it could be.